And now for the rest of the news from the markets, it's over to Jane Edwards. Jane.
Thanks, Alan. And the combination of some pretty good profit results at home and hopes of a Eurozone debt deal lifted Wall Street stocks sharply higher on Friday. The Dow and the S&P shot up by 2%, taking blue chips to their highest level since early August. Investors punted on the possibility that Eurozone leaders can find a way to manage a Greek restructure, recapitalise banks and bolster their financial stability fund at the first of their two summits starting later today. While the Occupy Wall Street protests continued in New York, across in Los Angeles, the News Corporation AGM became the chief focus of fury about corporate governance. After an intense and sometimes acrimonious meeting, Rupert Murdoch and sons James and Lachlan prevailed by being re-elected as directors, even though the company refused to disclose the exact numbers in the voting tally. Looking at weekly share movements, Friday's big rally helped the US to a 1% gain, but it wasn't enough for the other markets, including Australia. With more on that, here's Marcus Padley.
Well, not such a flash week this week. We are clearly pausing ahead of this European solution being announced, which had better be good because for a while there the market rallied 11.6% in less than 2 weeks. But the main story this week was the resources sector, which had disastrous performance. Whilst we're all looking at Europe, maybe we ought to look at China, where the GDP number was okay, but it came in a bit below expectations. And if you look, metal prices are now down, in some cases, over 30% from their year highs. The iron ore price has fallen 20% in 6 weeks. Even the gold price is down 15% from the high. And it made for a pretty awful picture for some of the major resources. We saw third quarter production numbers from a number of resources stocks as well, including Newcrest, which disappointed with a 16% fall in production. BHPs were okay, and we had numbers from Resolute, Oz Minerals, Santos, Woodside, and Fortescue as well. Theirs were notable. Their share price fell. They told us that demand for Chinese steel is weakening, and also that iron ore prices had taken a turn for the worse. We saw a bunch of AGMs this week, including Ansell, CSL, Amcor, Cochlear, which is bouncing back from that recent product recall, and Telstra, who voted through the NBN deal and encouragingly talked about doing a buyback once the deal was complete. Retailers, some of them had a good week, Myer and David Jones in particular. Wesfarmers fell on the back of their quarterly sales numbers. Woolworths is trying to get away a note issue at the moment. And Super Retail Group got sold off after brokers criticised them for overpaying for Rebel Sport. They paid $610 million. In other stories, Seek had a good week on talk of a float of their Chinese website business. Qantas was down after a week of strike talk. ERA down after coming out of a trading halt post-capital raising. Cougar Energy up after they said they would pursue a $34 million legal claim. And Linus Corporation down on concerns about a Malaysian import licence. Lastly, banks outperformed resources this week. We're running into the results season. NAB results on Thursday. Winner of the week this week was Seven West, up 14% after they finalised a new credit facility worth just less than $2 billion. And loser of the week was Pacific Brands, down 14% with no specific company announcements.